Hey there, Cherry Bombers. It's Friday, December 10th, 2021, and we're looking at another short put from Tasty Trade. This short put, of course, is going to be a little bit more risk than maybe some of the other underlines, TLT being an ETF that tracks bonds. I'm going to do my quick overview of this trade, by the way. It's got a liquidity rank of 4 out of 4 and an IV rank of 36. We're going to be selling some premium, and whether or not that premium is undefined risk or defined risk is up to you, of course, as always. So if you're willing to stick with me, you're awesome. Thanks so much. Let's go ahead and get started. Hi, everybody. My name is Neil, and this is Option Theory. Thank you so much for joining us. And we, as you can see, are inside of Thinkorswim's simulated trading so that we can get all of the learning without any of the risk. So when it's time to risk your real dollars, you have a history and you have experience, right? Hopefully, you'll join us. All you have to do is hit that subscribe button, and you have a trading partner, hopefully for life. All right. So let's go ahead and take a look at this trade as it was sent to us. We're going to pull up the charts real fast. EEM was the last trade we did. I think I missed yesterday's trade. Sorry. Sometimes I have difficulty getting up. All right, so let's go ahead and type in TLT. And apparently I had an alert for that one. Let's go ahead and delete that alert. And yeah, we are on a downward trend, 4 down days for TLT in this week after a nice run up. So where are we headed? It looks like we've sort of didn't go as low as we went the day before. So maybe we're going to be trending up again here. We have higher highs, right? And well, here we have sort of a double bottom here. Ooh, that could be interesting. All right. Okay. So let's see if we can be a little bullish here. So let's go to the Analyze tab, go to Add Simulated Trade. We're going to be in the monthlies. Yay, monthlies. Who loves monthlies? Me. Right. And what we're going to do is look at the 144 strike, which is a 27 delta. We have 8,000 open interest and 6-cent wide bid-ask spread. That is nice liquidity. Compared to many of the other underlyings we trade, that is great liquidity. Not the best, though, of course, but definitely up there. So let's go ahead and click on the bid for the 144. Based on our settings, that does one contract. Careful, yours may say 10. We covered that in other videos here where we adjust our order defaults. And it looks like it wants us to collect 133, so we could probably penny that up to 136 to get a mid price. Let's go to the risk profile, of course, because if you're trading options, you get to know your probabilities and whether or not you want to use those probabilities and live with them, right? So let's go ahead and spread this out a little bit, get our expected, well, I know why that's happening. Silly me. When you get to this screen, one of the first things you want to do, of course, is change this date in the top right corner to match the date you see in the bottom left corner. Let's go ahead and change that to January 22nd. There we go. Our expected move, this lighter gray area here, is much larger now. I'm going to spread it out a little bit more, and let's go ahead and get our price slices set to break even at expiration. So now we're looking at expiration at 76.45. Let's call it 76% probability of profit at expiration. And, it's always nice for me. I like to drag this guy up to where my short strike is, right? Pretty much right there. I'm looking at a 70% probability of making the full profit on this trade at expiration. That's pretty awesome probabilities. If you think about 7 out of 10, rolls of the dice going your direction, that's pretty good. Now, the tough part, I'm going to go set that back to break even at expiration. The tough part, of course, is the amount of buying power required for this type of trade here, because it is undefined in the sense that, like, it can go all the way, but all the way is limited to 0, and that means you could lose quite a bit of money. So I want to right-click this trade, choose Confirm and Send, and I want to pull that up for you here because my recording software doesn't show it. It shows you that we're going to require, if you're trading in an IRA, it's going to require that you hold $14,200, let's call it $300 in your account. It's going to be tied up for this type of trade. And if you want to get an idea of what your max possible return on capital is here, if we do 136 over 14,264, that means if you make everything that you can on this trade at expiration, you could make a 0.9% return on your on capital. That's tough. That's a tough jagged pill to swallow there. So yeah, you're taking risk for 40, I don't remember how many days it was, 42 days? 42 days, all right, and you can make at most 0.9% return on capital. So for me, with that amount of risk and that and my account size, a trade like this doesn't make sense, in my opinion. But because this is, you know, option theory, and we like to be able to test things. Hey, let's let things move against us now here in simulated land. I'm going to go ahead and put this trade in my margin account, and then I'm going to switch over to an IRA account and build out a trade that, of course, will give us a much lower capital requirement and a better return on capital. So let's pull up, actually, believe it or not, let's pull up Tastyworks. The same trade, I forgot to cover the P50 on this one. The P50 is for the trade we just looked at, the naked put, the 144, is an 86% probability of us making half that profit in 42 days. And what I want to propose is that we just go over to the next, $5 increment here. The low is going to be 140, and we go ahead and we buy that put. And now we have a $4 wide. We can make $72. We're risking $328. And yeah, P50 is only 2% lower. 84% probability of us making half of that. Let's call that $36. Let's say we have an 84% probability of making, we said 36. And what's our risk? 328. I'm going to show you this again, I promise. That is this screen. Here's my calculator. Oh, yep, hit the wrong button. Hang on. Let's go 36 over 328. And here we have the ability. Did I do that right? Is that right? 36 over 328. There we go. That's much better. So we're looking at a 84% probability of being able to make a almost 11% return on capital, and not requiring $14,000 of capital be tied up, only $330, let's call it. So that trade is more my speed. I wonder what you think. So let's go back to Thinkorswim. Let's build this in Thinkorswim. And we just have to go back. I'm going to hold down the control key and click on the 140. Now I've got my short put vert. I thought I had my short put vertical. That's right. I sent that trade already. 144, 140, short put vertical. They're giving me a credit here in this case of 71 cents. I think we had 72 in the other one. Let's just leave it the way it is. I'm going to go ahead and take a look at the risk profile for this trade. That slices to break even. 74.23%. So you're taking a similar position using far less capital and can therefore get a better return on capital. I'm going to right click this trade, choose confirm and send, show you that we're looking at a max loss of $329 on this trade here. And that's a much lower buying power effect. So yeehaw, what do you think? I'm going to go ahead and hit send and take a break for a few days because apparently tripping over my own tongue. All right, if you made it this far into the video, thumbs up to you. Thank you so much. You're a rock star. Just hit the microphone. Sorry if that was loud. All right, until I see you guys next week, may the market be with you.